Special edition. I'm here at the Beaver Creek Conference, and I'm joined today by Joe Mazumdar, Brent Cook, our editor-in-chief here, Paul Harris, and Tim Oliver. It's part of the Mining Deal Club's actually assembled. It feels like the Avengers. And no, thanks for taking the time, guys. And it's a rare opportunity to sit down with all of you at the same time. And we decided to discuss briefly what we're seeing here at the conference, but also our post-Labor Day emotions. Like, what have you seen post-Labor Day? Has it reached expectations? Are we below expectations in the markets? And what has stuck out maybe in terms of maybe financing activity or just market activity in general? So, since I'm looking at you right now, Joe, like, why don't you start us off? Like, what's the feel here at the conference? There's over 160 companies here, and not counting the ones that have just showed up and are just lounging around the Park Hyatt.
Well, yeah, I would say that talking to some companies, they're booked out with meetings, but potentially 40% of those meetings are something that they might be able to do something with. And so trying to refine those meetings for some people is being the issue, because a lot of people are kicking the tires and potentially wasting their time in terms of the industry, because the industry is a big part of Beaver Creek, as well as the Denver Gold Show, with respect to the private placements we've seen, a bit of the M&A, and there's been a strong underlying group Australian contingent here.
It's actually kind of surprising that the conference is doing so well, given what the market in general has been doing. And what it's telling Joe and I think is that the major mining companies from North America as well as Australia are all here, and they're looking for earlier stage projects, and there's a lot of them here. So it's actually I think it's a pretty positive event.
I think from the presentations and meetings I've had, a lot of juniors really are positioning themselves, trying to be bought out. I mean, that seems to be the game at the moment. You can't raise money, or it's difficult to raise money, so put yourself in a position where somebody's going to come and write a check and just take you out the game.
It's a bit of an information gathering event as well. There's not a lot of deals being discussed, but companies, as you said, are kicking the tires, and especially the Aussies are sticking out.
Well, the Australians are a bit different. Like the Australians, they have an easier time of talking and saying that I'm going to build this resource and then I'm going to mine it. That junior company almost doesn't exist in Canada that would actually say that out loud. Whereas the Australians, that's what they do, and they have built a lot of mid-tier companies over the last 5 to 10 years based on that kind of philosophy. And now those mid-tier companies are flush with cash. Australian dollar's been weak, so the Australian gold price has been very good for them. And their share price, according to Joe Foster, I haven't been looking, but he's saying that some of these guys are trading at almost peaks. And so their paper is very valuable right now. And so now, in terms of acquisition, it seems to me that Asia is not some place where they consider that they want to grow. And so it's either finding something else in Australia with the other mid-tiers and the competitive nature of that, or go to the Americas, where some of these American-based companies, Canadian-based companies aren't doing anything. Yeah. These guys are filling the void. Like, if you look at the Northern Star acquisition of Pogo, that's been sitting there for a while. And these guys swooped in and took it for about $60-65 an ounce of reserves. Very accretive.
Could you argue that the Canadian market's actually adverse to juniors bringing their deposits into production?
Absolutely.
The record hasn't been very good. The few that have tried.
And a lot of the juniors already have the for sale sound out on the door before they even drill the first hole.
Well, some of it is trying to pull something where you do the least amount of work to show the biggest amount of upside, and without de-risking much.
You just described a millennial. That's what it sounded like.
Well, we're seeing now, they're also coming in very early stage projects, like Newcrest has put money into very early stage projects with Mazumdar, Sol Gold. They're coming in early stage projects, which again tells you they're not seeing a lot out there that they really want to buy. It's good enough. It's a big hurdle.
No, Australia's been, every stone's been turned pretty much in Australia, so they have to come out here, like Ecuador even. Like you said, Sol Gold, that seems to be one of the new frontiers. Mm-hmm. And, Mongolia to a degree, but I don't see a lot of Aussies sweeping in there at this point.
It's hard. I mean, the thing is that I think that they get a lot of premium for being low geopolitical risk in Australia. The temptation to take on a higher risk asset is not huge in this market.
No, and I've spoken to companies actually, and also Nevada-based explorers here, and they've seen a lot of interest, just exactly what we described, and they've been confirming that actually. And a lot of them have 20, 30, even 40% meetings just with corporates. they're just kicking the tires here, just looking what's going on.
Nevada's a bit more difficult depending what you're looking for. If you're looking for porphyries, yes. If you're looking for, Carlin and the sulfide Carlin, then you eventually have to build your own roaster, which is hard to permit, or you have to talk to Barrick and Newmont. So logistically, for another company to come in to make a footprint into that district, they have to think about soup to nuts if they can actually do this.
But that is happening, isn't it? The competitive situation in Nevada is, ramping up and dialing up, and there's some bigger companies getting in that don't have that infrastructure, but are still taking up big positions.
Those are oxide deposits so far. I mean, you're talking about gold standard.
Well, no, I was thinking more of Corvus. They've got like Anglo Gold Ashanti and a couple of others in
Yeah,
there.
yeah, exactly. That
And,
one
he
is
needs
refractory,
great PRs.
but it's a whole district. It's a different basin, and potentially you could permit something there.
Yeah.
But in the Carlin trend, in some of those valleys, you could not permit another autoclave or a roaster. And so you would have to toll mill it through Barrick or Newmont. And some of the economics around toll milling can be, kill some projects.
Let's move away a little bit from beautiful Beaver Creek here. We're sitting out here in the sun and we're enjoying life pretty much. I think we're really lucky to be doing what we're doing. But let's talk about post-Labor Day activities. Like, everybody's been waiting for Labor Day for activity to pick up. I haven't seen it. Not really.
It's a non-event, yeah.
Well, I think Brent commented as soon as the day after Labor Day, and you sent me an email saying, what
Yeah, where's all the
happened?
news?
Yeah, I've been saying that to other people as well. It's like, wait a second. Last year we had like 200 press releases on the Tuesday after. This year it felt like 3.
Yeah, there has been a fair bit, but not near as much as I expected.
There
Yeah.
has been an issue, logistics issue with people in Canada with the assays. Because the assaying and the amount of activity has not been huge, the staffing in some of these labs has been low. And so when they went in the summer, for some reason, they didn't staff up. And we've got a lot more delays than we expected. And so a lot of the drilling assays have been a little bit slower. I'm not sure if that affects everybody, but some
But
companies
it's
I've
affecting
talked
at
to-
least one company we were all thinking of.
Well, particularly if you've got massive nickel and you're pulling out of the hole with donkeys, that really slows down your assay time.
And the donkeys are dead, aren't they?
That's the rumor.
Okay. Are you seeing any trends emerging? Any trends emerging here at the conference, or anything that's changed over the last 4, 6, 8 weeks that
I think
investors
that
are jumping on right now?
Well, the trend is continuing that the majors are putting money into earlier stage projects, and the other trend is that very selectively, an occasional stock will double or triple on some news, and that's interesting too. So I think tells us that there's a lot of money on the sidelines. They're just waiting for a discovery.
Yeah,
They'll
I think
jump on anything often without looking.
Now, I think I've said that before in one of the other podcasts, but people made money in 16 and 17 and pulled that money out of the market, and that money's sitting on the sidelines. But I'm not sure what you're seeing, but I'm not seeing a lot of financing activity. I think I talked to 2 companies so far in 10 meetings. Maybe 2 of them are considering a financing right now. So I think a lot of companies are postponing to Q1 next year. They're saying, they try to stress actually in the meetings that even if they only have like sub $1 million in the bank, they're like, we don't need money right now. They're trying to stress that so they don't feel pressured into doing a financing right now.
Yeah, I would say, like I think Brent mentioned before, there's some companies that can still get money regardless, but they just don't want to raise at this level. But if they wanted to, they could get it. There's other people that won't get anything. And those people that have the management or the assets, I don't think they have an issue with the current market. The issue with the institutional equity is the actively managed funds. The proportion of assets under management obviously is shrunk. But the other issue has been that the proportion that's actively managed has gone from being 80, about 2/3 of what was actively managed before, and now it's down to about 10 to 15%. So the amount of people actually doling out money is less. So the pie has shrunk, but the slice going to them is smaller too.
I was half jokingly saying everybody was traveling on Tuesday and Wednesday to get here. Why put out a press release? The investment community is right here. All the 1,000 investors that remain in the junior space, right? So, it's sarcastic, but it feels like it to a degree. So, any closing, Tim? You haven't said anything yet. What are you saying?
Well, I haven't taken as big a sample as the rest of you. It's actually been pretty slow. What struck me is the companies I talked to have are at the stage where they've completed a round of drilling. They may or may not have done a resource before, and they'll do another one, and they're holding on to their money. They need to do a raise before they follow what they learned or go to the next stage. And it seems like that's common at a certain size of a junior, that I would consider almost a stalemate. They're all conserving their money, so they don't want to do more met testing or do more drilling if they're in a climate where they can do it. The ones up north are done for the season. They're waiting for their assays. It just seems like there's a built-up of pressure that's going to break, all looking for money at the same time. If it were me, I'd be out there now, ahead of the pack, trying to get what money I could to keep in business for the next at least year, or till I can get somebody to look.
It's actually a good point, because it feels like we're seeing a buildup of pressure for Q1, that everybody seems to be coming out in January now, just waiting.
Oh, yeah. Well, the tax loss selling issue,
And all of
as
that.
well as you don't want to get pounded on a press release either.
Yeah.
So there might be some of that going into November.
Gentlemen, thank you so much for your time, and enjoy the rest of the beautiful day here in Beaver Creek.
Will do.
Thank
Thanks.
you.
Thank
All
you.
right, Kai.